Welcome, everybody, to the Capital Lending Fund webinar. Some of you are already existing investors. Some of you are potentially new investors. We have content for the both of you. Today, we're going to go through the history of our relationship. We are going to go through past projects. We're going to talk about projects on the horizon, what the investment actually is, how the market is, and where we think the market is going. So just get our partners are at Paragon Group, led by PG. PG's on the call today.
Hello, everyone. Glad to be here.
So this is our agenda. I kind of just shared a little bit about this. Let's get started. So first, let me introduce myself. I'm Ramu Velu, and I'm a managing partner at Team Velu Investments. I have experience in several asset classes in real estate, as you can see, right? I'm in multifamily, single family, warehouse, short-term rental, long-term rental, warehousing, co-living, land development, and of course, lending, right? I'm a co-sponsor for 4 different syndications and a GP alongside a few other people. We've raised $18 million in equity over the last 2 years. And of course, I'm a licensed realtor, have over half a decade of experience in real estate, and I'm an Eagle Scout. But before I kind of introduce PG and our relationship with him, I would like to introduce my father, Dr. Raman Velu. Dad?
Yes, thank you, Ramu. And I am Raman Velu. I go by my last name Velu, and I have been investing in Dallas market since 2006, 2007. And I became a realtor in 2013, end of 13. And I joined Keller Williams in 2014. And I was the Rookie of the Year. I got that award as well. And before the end of 2014, I met PG, and we started our relationship as well. And I've been a top producing realtor and broker, and I came out after I became a broker and started my own Team Velu Investments. And I was able to help more than 400 of my clients buy a second home, investment home. And all of them are doing pretty well. And most of them, they bought it at $135,000 to $150,000 houses, which are at about $350 to $400. And you may think that, oh, $150,000 house to $300,000 house is 100% raise. And what I teach people is no, $150,000 house, you put only $30,000. And now you have got $210,000 of increase. That means 700% is your return. So that is what I educate people, and how to, many times they were able to reinvest the money by refinancing the house, and then get the money out and then buy another house and buy another house type of thing. And I have continuously been able to support them. And now they have become our Team Velu's portal investors, and they are now investing in various investments we are offering, including warehouses, apartment investments. And this particular investment, we will talk about it in detail. And we have been also doing a lot of multifamily, and we have raised over $35 million in the last 4 years. And I have been given an honorary doctorate in India for my charity contributions and contribution to the community. So I'm here to support people with their financial goals, and I have declared myself as not financially independent, but I said that my horizontal income is much more than what I need, and that is how I'm able to follow a certain lifestyle. And I've been traveling almost more than 6 months in a year for the last couple of years. And most of my horizontal income comes from, at least more than 30 to 40%, comes from PG. Anyway, I have, from our family alone, we have invested more than $500,000 with the PG. And so I'm glad to be presenting this particular investment opportunity to you and why this is important. This is a very liquid investment, unlike the other ones, and we will talk about all those flexibilities. And now I'll hand it to PG to introduce himself.
If
And
I can, actually, I
yeah,
would
go
like
ahead.
to say a few words. PG, may I?
Sure, by all means.
Thank you, PG. So, like Dad said, our family alone has over $500,000 invested in the Paragon Group through the Capital Lending Fund. As you can imagine, we have more money with PG than we do in our own bank accounts. I joke around with my friends and I say, PG is our bank account, not because I get to draw money from him, but because that's where all my money goes. The reason we do that is because of consistency. Everyone asks, what's the biggest risks in this investment? And I tell them my thoughts, and we will share that at the end. And they go, well, has that ever happened? And I say, no, you asked for the risks. Those are the risks. They're unfounded, though. We have had an investing relationship with PG for 9 years. We've known him. We just discovered at the beginning of the call, or I discovered, that it's going to be 10 years of knowing PG and his family in about 3 more months. Now, a decade of relationship, 9 years of investing relationship. He's never missed a single payment. He's never been late on a single payment. Anytime we want to withdraw our capital after the allotted period that we agreed on, he's never been short of cash. So how does he do it? How does this all work? He's going to tell us all of that towards the end of the presentation. I just want to say, PG, it's amazing to know you. I meet PG. My dad and I go to lunch with him or have coffee with him a few times a year. We catch up. And it's always consistent projects that he's working on. At the risk of sounding a little different, I'm going to be very, very honest. This is one of the most boring investments anybody can make, because you put money in and money comes out, and the same amount of money is going to come out relative to what you put in. Not much is going to change year after year. The reason I say that is because boring investments are good. If you are very excited about your investing, that's called gambling. You have no idea what the outcome is going to be. The reason we trust PG so much is because of that consistency. So, PG, thank you for being a part of our extended family. Thank you for being our business partner. Thank you for offering this investment to our investors. I encourage all of our new investors to start investing with you, because everybody wants to see those consistent returns. It really boosts people's morale and interest to invest after they invest in the Capital Lending Fund, especially for new investors. And of course, we also have some seasoned investors, I'll say, that have north of 400,000 with you. Basically, they just pay all their bills from the check that PG sends them every quarter. So we'll talk more about that later. But first, I want to introduce PG to introduce himself, his team, and then we'll get started with the presentation. Over to you.
Thank you, Ramal. I appreciate it. And I do appreciate and really am honored the friendship and the business relation that we've shared, our families. And I also met Velu at Keller Williams, January of 2014, I believe it was. And so, yes, soon it'll be 10 years. I've had the pleasure of knowing the family, knowing Velu as a person, truly a selfless individual. And even though we're about the same age, I always look at him as a bigger brother. So
PG is, he has been a realtor, but he has been in this real estate industry for a very long time. And his experience goes way back to 30 years, and he's also going to mention. And he's not only a realtor, but also he has a big team and he manages the team. And also he continuously purchases properties at a discount, and also he sees a lot of upside in the property and he holds it for a longer time, and he consistently makes a good profit, and that's how he's able to share profit with us. And so he has got multiple skills, including construction and all that. So that is about him, and it is over 30 years of experience. Now he's going to talk about market and how he has been doing it. Go ahead, please.
Yes, and through that, I appreciate you bringing that out. I didn't want to toot my own horn at the beginning, but through the slides, we'll also see there are examples that go back at least 30 years. I started my first construction job in Dallas in 1984, and that's how I put myself through college since then. But in the 80s, I did property management, had our first flip in 1991 or two, sold it in 94. And then from there on, it's continued. And as we'll see, especially in the next slide, the market has always had its challenges. There's been inflations, recessions, there's been pandemic, 9/11, you name it. And I've seen it all in the last 40 years. The main thing that remains here is for especially those who are newer to real estate investment, and especially when we know less about any industry or any profession, we tend to be affected more by all the news and the turbulations in the economy and so on. But we, especially in the DFW area, as well as what you see on the screen right now, which is called the Texas Triangle, we are sitting in the fastest growing region in the entire United States. And this is with a projection of almost 100% by 2050. The slide that you see on the lower left of the screen, it does show some of the counties that are the fastest growing. And this is just a comparison between 2015 to 2030, and the projection that you can see is about over 33% increase in population, all of which are going to need somewhere to live. And that's why the real estate market in DFW and in general in our region is never going down. And as we'll see on the next slide, please, Roman, this is from the HUD department, and it's a indicative of the last 60 years real estate price trends. The gray areas that you see, and some of y'all may have seen these on our website, it does show the gray areas of depression, recession, and the turbulences that we've had. Regardless, real estate never comes down permanently. There's always fluctuations, which are temporary. And a lot of these affect the housing market, the one-time home buyer or home seller. But when you look at real estate in terms of real estate investment, and especially in commercial, a lot of those perimeters fade away when you look at the larger pictures and bigger planning. Can we move on to the next one, please? This is, in fact, where interest rates that everybody's freaking about, them getting closer to, 7.5%, 8%. In the 1980s and early 90s, interest rates were never lower than 10%, actually, very seldom. And despite that, if we go back to the previous slide, you'll see for the same period of time, there's still a price increase. So regardless, people are moving into our region, and Texas is very soon surpassing even California in terms of population and economy. And that's why there's no other investment, no other industry can show you the projection of 100% increase by the next decade or the following. And that's why the consistency is really the key here. If you're able to, I'll even advise you, or Velu could, or Brahma could, where to put your money. If you're not aware of the market enough, you don't have the expertise, you don't have the time, by all means, this is the simplest and the easiest way to have your share of the real estate market profits without having to worry of, am I going to lose money? Because over the last 40 years, all of our experience shows that we continue to thrive and expand. And even after 2008, when we lost a lot of properties, we're still here and going strong. These are some of the examples of our projects. And I'm going to zip through most of these real quick, just to give you all an example of the small and large projects. We've done some houses that if you look them up, you can look up all these addresses, and they're selling for upwards of $1.5–2 million today. We've done a lot that have been small flips, and we may have bought them for 50, 60, 70,000 and sold them for 225, 250 or more. So it's really not a matter of what the property is choosing the right property. And if we can move on, please, Ramon. These are some examples, and we're going to skip through these sort of quick. This is a fourplex apartment that we did. I'm sorry, go ahead.
I was going to say, I wanted to kind of chime in and talk about this slide in particular.
Sure.
This home was pretty dilapidated. When calling this a flip is a misnomer. The only thing that did not change was most of the studs stayed in the same place. We literally redid the foundation, redid the subfloors, the floors, all of the walls, all of the windows, the roof, all the interior walls, everything on the inside, the electric, the HVAC, the plumbing. I mean, it was basically a reconstruction. The only reason we didn't bulldoze it is because then you need to pull new permits. But if you keep the frame without moving an inch, then it is considered a rehab. Although it was basically, it was far more than a gut renovation. It was like a 95% renovation. On the other end of it, the property looks gorgeous, as you can see in the bottom left. We turned one big funky house into an apartment style, all done by PG's genius. So just wanted to share that big win and what he's capable of doing.
And I would add too that this was a property that by a lot of accounts wouldn't appraised for what it did. And fortunately we were able to get a decent appraisal at over $500,000 and get it financed, and it's fully occupied right now with tenants in it, and it's paying for itself.
It's amazing. This property is in 1994. Yes, Dan.
Yes, that's the first rental or investment property that I bought with my brother back then. And we did some upgrades as much as needed, kept it for a couple years, and then put it back on the market.
Nice. 98.
Yes, this one, another one in Plano. Keep going, that's fine. We can just zip through these. This is one that we did in Dallas in 2000. Right now, I looked it up actually, and it was listed for 2.1 million, I think. Keep moving. Oh, that's the same as the line. Again, 2005. This is just some slides from various projects. Before the market fell through, we did a lot of higher end. That's why a lot of what you see currently as far as reconstruction and flip projects are smaller, some older houses. And of course, amongst them, there are some real nice jewels like the one you saw in the lake house. We have some larger projects going on, like the apartment building that the concept plan was just up. Yes, we just got this final plans approved by the city, started the earthwork this week, and moving on with the construction on it. This should be complete towards the end of next year. It's a 34-unit apartment building with 24 three-bedroom units and 10 two-bedroom units, all of them townhome style with garages and fully updated.
Which city is it?
This is in Greenville.
Greenville, okay.
Yes. I thought it said
Also has a apartment project in Princeton as well.
Yeah, that's
yes.
why. Yeah.
This one is a subdivision that we're doing in Rowlett. Again, the construction has started. These are not all the updated shots, of course, in the constraint of the time frame that we've had. We just picked some examples of different projects. This is actually the wet utilities done, and they're starting the concrete in the streets pretty soon. And this is one of the main projects that we're going to be getting some funding together for those interested. You can get the details and more information from Ramu or Velu, and I'd be available as well myself.
Yeah, one of the things which I would like to say is I have been involved. I know right from the time he purchased this land, and at that time he needed only about $700,000 or $800,000, and then later on, right now, the amount of investment has gone in is a little over $3 million, I believe, and he has been holding this property for over 5 years or 6 years. How many years?
It's going on 5 years, yes.
It's about 5 years, but you need a lot of patience, and you need to be paying interest for all those $3 million. And then the benefit what he is getting is he was going to sell the houses for $250,000. Now the houses are going to sell for $500,000. I'm just
Yes,
giving
they
some
start at
rough-
585 actually.
585. So just to give you guys some idea. All right, go ahead.
If I can chime in, PG plays the long game. He buys and holds. And what he's very good at is he holds only the assets that appreciate, and he doesn't put depreciable assets on the ground while he waits. What does that mean? He buys land and he just waits. If there's a house on it, minor fixes. And then when the land value goes through the roof, then he puts more money into it, puts a building on it, and then your ROI goes exponential. It's not double, it's like 5x. Here's the catch. PG's taking home that big check. He's paying us a consistent check. If you must be curious, how is he able to pay that consistently in any market? That's how. He has a amazing capacity to make big returns, but he needs to hold the capital for a long time.
Yeah.
Ergo our fund, ergo the system. So PG, if you can kind of share with us about the inner workings of how your business is run.
Sure.
Yeah. And then I'll talk about the rest on the slide, but please tell us the back end of how your business operates.
Exactly. As you were mentioning, a lot of the properties that we're getting are either raw land or in dilapidated condition, and it's not the type of product that you could just go to a regular bank and get financing like you would do when you're purchasing your home. So we have to deal with either a lot of hard money lenders or in LIOA with private capital such as we are. The important factor is that because of the volume of and the capacity of business that we manage and run, which is currently in excess of about 25 million in assets, it gives us the freedom to apply the funds wherever it's needed and have the ability to pause on the project, such as, for example, we had 3 acres property in 121, which oddly enough is not one of the slides here, but 121, for those of you who are familiar with the area, just completed the highway and the property price went through the roof. While that construction was going on, we just sat on the property. And now that it's completed, I've got it already leased for $6,500 a month plus triple net. This is going to pay for itself. And then in about 4 to 5 years' time, we're going to graze the whole land and put a multifamily in there. So essentially every bit of fund that we have is backed by a specific piece of property as collateral. Every asset, every fund that we receive is going to have a promissory note and a deed of trust, which is basically the instrument of lien, recorded in any county that the property is sitting in. That basically provides the lender the security instrument for their funds, and that loan needs to be paid off at the time the property is conveyed or sold, or if we even get refinancing, they will see that you have filed a lien, and they're going to call you just like a mortgage company and say, Mr. Y or Z, what is your payoff? In this model, your payoff is generally going to be the same as the principal of your loan, because you've been getting paid the interest throughout the life of the project. One of the new aspects of our long-term projects, especially, that we are introducing as a experiment with is to encourage some of our investors to have their funds in for longer, especially on the longer term projects, is to have an incrementally increasing percentage rate at the end of each year that they remain with us. And as Rama was mentioning, we do have some investors who have hundreds of thousands invested, and they've been with us for over 5, 7, 8 years. So it's a very good incentive for those who are especially not needing the constant cash flow and looking long term. But my advice is, even when you hear interest rates went up, we have inflation, fear of recession, think twice before taking your money out and putting into something risky. Everybody knows about stocks. I don't even have to talk about Bitcoins and such. But make sure that you have the ability to control the fate of your investment. I'm sure you can find out more about, for example, even 401k and IRAs, and how you can convert them into self-managed investments and benefit from your money that's sitting. Don't just go put it in, putting money in stock, in my opinion, is just gambling. You have no control over it. It could make a lot of money for you, but you could lose it all as well. So that's
PJ, I got a few questions.
Yes.
So, looking at what a lender should look for, right? In this relationship, you'd be the borrower, the investor would be the lender. Credit, capacity, collateral, capital, and conditions. So
Yes.
Credit, of course, you got a 10-year history, 9-year history of on-time payments every quarter. Great. That's a sterling reputation. Capacity, ability to pay back the loan. We're going to talk about that. Collateral, a way to secure the loan. You just spoke about that. Now, and the conditions is also something that is the investment terms, which we'll cover in the next slide. So we got 1, 3, and 5. Let's talk about 2 and 4. Capacity. How do you have the capacity if you have $4 million in an outstanding collective note to pay that interest payment every quarter? Can you tell us about your cash flow income, cash balances? And while we're at it, number 4 as well, how do you always have the cash ready in case somebody wants it back at the end of a year? You're able to just transfer it in 30, 45, 60 days. How is it possible?
Good question. As we were talking earlier before the session actually started, we have just in the last 4 months, we have paid back or paid off over $1 million in our investors' funds and assets. This is done in 2 aspects, basically. First, the long-term projects that we do rely on the cash flow from the flips and the small projects. Those are the shorter-term projects. So there's always a cash flow, and based on the specific project and the life of the note, we always expect what investments need to be paid off, and we're always able to reallocate the funds needed for a payoff. And that's where the time period that you mentioned, if we're within the lifetime of a given note, even if somebody has an emergency, we just require a 60-day notice and we can get them cashed out. If the note is within the last 30 days or past the maturity date, we just require a 30 days notice to get it paid out. This is simply done by having a release of lien, which relieves us of that liability. And basically, it's going to be up to the investor whether they choose to cash out even after a project is completed, or they would like to transfer it to a new asset, for example. So there's always a multiple array of options in terms of the types of projects that we have, which we always send out the information to the investors or potential investors, as well as the updates and the backup that we provide post-closing and after a project has started. And fortunately, I've been able to stay on top of that and have that personal connection with all of our investors on all the updates personally, and keep them abreast on the progress, when to expect the project to be completed, and if they've had any need for, get cashed out college fund, children getting married, and all of these stuff that come along the normal course of our lives do happen, and we are sensitive to that, and we want to have long-term and healthy relations with all of our investors.
PG, that sounds awesome. I got one more question for you, and then I'm
Yes,
gonna
sir.
share the terms of the investment. How much liquid cash do you keep in your bank account? And I say your bank account, the company's bank account, at any given time for emergencies, for bills, for principal repayment, whatever it may be.
Usually no more than 500,000 to $1 million, and the reason is because we're always hunting for new deals. So as long as the current costs of the projects are covered, we're looking at what funds are coming in. But currently we have about, as I said, 25 million in market value in assets. We have about close to 4 million in liabilities against them. And our cash flow has always been in the average between 500 to $1 million in the accounts.
That's amazing. Thank you.
Ramu, I
Yes.
just want to quickly take a few minutes while, yeah, go ahead and then, oh, all right, start my video. Okay. So when we started funding PG, how it was is like he would buy a house for say $75,000, and then he'll say that, hey, give me $50,000, and then I give $50,000, and then he buys it at 75, and then he puts in 25 or 35 or 45, and then sell it for 175 or 200,000, right? Well, that time the house is now liened to me, so that he cannot sell the house without paying me off, because the house loan has been it has been recorded into the county, basically. So that is your security. Your money is secured, and most of the time you have got more value in the property than the money what you have loaned. That is another advantage. And then when I did a flip, I was only looking to make 10%, but I made $5,000 after 3 months of hard work and so many hours. And then finally I made a small mistake of not checking the foundation. As soon as the foundation work was done and there was a plumbing leak, then that $5,000 was gone.
That's gone too.
That repair. So I said, man, I don't want to do any more flip. I'm not good at it. So I was not even able to make 10%. So unless, like he makes 24%, he cannot pay us 12%. So he is really good at what he's doing, and that's what we are banking on. And also it is a secured loan, and also it is liquid. Like when you ask, like in an apartment, when you put the money, it is locked for at least 3 to 5 years until it is sold or it is refinanced. But whereas here, you can always, a lot of people keep $100,000 in the bank just in case, like 5 months worth of expenses or salary or whatever it is. But that, I say that, hey, keep only $20,000, $25,000, and rest of the money you park here, so that, like before the money what you have is depleted, you can always get this money from him. So that is how people have parked some quite a bit of amount, and they never needed it, and it is going on for years, right? And also in certain period like this fluctuation, some of the people have got, okay, I don't want to put my money in too much of risky projects. At least 20% of my investment should be in safe investments, and this is a very good one. And so those are all the things I would like to say. I repeated a lot of things what PG said, but in different terms or different words, right? Hopefully that repetition was helpful to you guys. Now back to you, Ramu, to talk about the slide of terms.
Absolutely. Thank you, Dad. I think something else that I would like to highlight is considered liquid by the bank. It is a liquid asset because it is cash-based, and we can return your funds. So that makes the investment liquid. Considered liquid means that if you're going to go buy a house and the bank says, great, you just need to show me that you have money to pay the mortgage for 6 months in case something happens. You can just call PG Well, you'd email him technically, right? And go, hey, I need a statement. He'll write you a letter. He'll take a screenshot of the bank account and he'll send it to the bank. And the bank will go, great. Now I know whatever amount you've invested can be funded at any time to you. So we will consider that liquid and treat it like it was in your own bank account. Except here's the difference. Your own bank account is paying you 0.002% interest rate. Basically 1 penny per every $1,000 you invest for a quarter. Like it's nothing. With Peachy, you're making 1% a month or 12% a year. Considered liquid, it's secure, and it's guaranteed. These they don't come around a lot, especially when you realize that the average stock market return is between 6 and 8% a year. And imagine how gut-wrenching it is to go up and down, and balance for 6 to 8%. Here, consistent 12%. It's night and day, in my opinion.
It is, and I would like to add, in general, investment, there is emotions, there is, all the stress that goes along with it. And as Velu was mentioning, with his flips, he would have been very satisfied if he made 10%. The important thing here is your expectation is very clear of what your return on investment is going to be in this model. I may make 25%, I may make 10%, but your income is fixed, and that hasn't changed for the past decade in our model.
And
something I'd like to share that, when I was much younger, and keep in mind, we've known Peachy for 10 years. So like when I was in college and I would talk about investing with my dad, he would say, you just got to find somebody like Peachy to partner with. And I'd be like, why? He goes, you can work really hard and make 10, 12%. He goes, or you can give it to Peachy and Peachy works really hard and you make 12%. You make the same amount of money. You just got to find the right person to give it to and partner with and have a good security instrument on, and you can make the same amount of money. And often in investing, guys, other people can make you more money than you can make yourself and make more money for themselves using your money than we could ever do with a lower risk because of how competent they are, how well they know the market. And this is another example of that. So like Peachy said, we shouldn't care if he's making 25 or 30%. We get 12, right?
Yeah.
That's the fact is that you will see a lot of investment models that may promise you the moon. The facts are that there is exposure and there's risk in all those promises that are not persistently proven. And when I say, the 12%, we're not just taking this out of the thin air. That's the money that it would cost for us to get through a hard lender, and it would be the same, ratio, except when we're dealing with private lenders and with individual investors, it's a win-win situation. We have more flexibility, you have better return, and it has helped us grow and expand our business over the years. So we are able to reach out and have a better program. We have always improved on our system, on the ability to get our clients and investors serviced. And in most cases, we are able to do direct deposits on quarterlies. We are able to provide even, as I said, incremental additional incentives for long-term duration of having your funds in our process. And you can always, of course, ask around for those of our investors that have been with us for long term. And I'm not a big fan of testimonials and such, because if the track record and the reputation wasn't there, obviously we wouldn't be having this conversation with Rama and Velu on.
Yeah, thank you, Peachy. And a couple of things I just wanted to say. I have been, as a life coach, I've been promoting horizontal income, right? Horizontal income, you have to get used to getting a regular income. And I always suggest new investors and every investor to have some money with PG so that, like some money is continuously flowing every quarter or, month after month, if you have a couple of investments and things like that. And that is very important for us to be able to work towards total horizontal income of that is equivalent to your total regular income. That is when you call yourself as financially independent and all that, right? That is most important. And this is where, otherwise it is all going to be paper money, right? Paper, it is value goes up, but you don't see the money, you don't get to spend it. And also the 12%, because he is giving every 3 months, and it is actually, you can use that 12% and then reinvest somewhere. So actually it is worth more than 12% at the end of the year because of the compounding. And so he may have a program where if you defer it and then take it once a year, you may get a little bit extra percentage or whatever it is. All those things we can always talk about when you're ready and on an individual basis. And we really thank you for your time. And it is now time for Q&A, I guess, unless there is any closing
Yeah,
comments.
I'd like to kind of share the investment process really quick, and then we'll get to Q&A. Please go to our investor portal and reserve your investment slot. $50,000 minimum. If you want to have a conversation about less than the minimum, please reach out to me personally. That will be granted on a case-by-case basis. Pretty much, it's going to come down to, are you an existing investor or a new investor? If you are an existing investor, we will work with you to be less than the minimum. If you're a new investor, we like to keep that line of 50,000. I can explain to you individually why we do that. Once you are ready, I have an email that I send to PG and his team and our staff, copying everybody on this process to kick off the investment process. At the time, PG is going to reach out to you personally. He's going to set up a phone call. You're going to discuss some things, and then you're going to complete the paperwork directly with them. At that time, once the investment is executed, they will take the original documents and overnight them to your house. They will take a copy of that document and once a month, go file it with the county. They will also email our team a soft copy of that same document, which we will store securely against your investment, reservation, and approval on the portal. So it'll be accessible everywhere. You can Google your lien and find it in the county records a couple of days after it gets filed. Every quarter, you will get an ACH or a check payment, depends on what you want. I actually prefer check because there's a lot of value to seeing the physical check and depositing it. I think it's good for your emotions, right? Otherwise, you might not even notice you got a deposit. So I recommend getting checks. Tax documents are sent upon request at the end of the year, and so are updates. PG does send updates, but if you're just ever curious, feel free to request. Because this is not put in any one project and it's very fluid, there's no routine, monthly update per se. Every quarter you get a check. If you have any questions, ask us. We will give you all the information that you want or could desire. Now it is time for questions. All right, we got our first question. What are the projects for the current investment? PG.
We have a couple of long-term projects that we are looking to get funding together. One of them is the subdivision single-family homes that you saw on the slides, and we'll provide more information for those interested. Another one is the apartment complex in Greenville, that 34-unit apartment complex townhomes. And then we have several flips that are going on right now. So really depending on the individual circumstances, the amount of investment, and once we have the conversation, have your questions answered, we can recommend which property is going to be best fit.
Perfect, thank you. Please drop your questions in the Q&A section, and we'll be happy to answer your questions. Of course, if you guys want to talk further about this, if you're watching this on a recorded webinar, text me. My number is on the screen. I will reply to you and we'll set up a call and have a discussion. We got another question for us. Why are these investments are managed through Team Velu portal like other investments? Maybe they're trying to ask, why are they not? The reason they are not is because everything else is regulated by a different body. right? In all the other investments, we're regulated by the SEC. In this investment, we're regulated by the Texas Real Estate Commission. What is a big difference? SEC documents, to have a security instrument or something like that, you're typically dealing with shares. Signatures are enough. We could do electronic signatures and we're good. PG is going to get the lien notarized in front of a notary public, and then it goes to the county. So that's a lot of manual, traditional style of paperwork, and that's why we let them have it. Otherwise, we could do it on the portal. We're just going to download it and send it to him, and then he's got to do the same thing anyways. We're just trying to save a step and time for you to have a smoother time with the investment.
Yeah, you can alternatively reach me as well in case Ramu is busy. It is velu@teamvelu.com, and my number is 972-754. Until then, it's a common, and then 5027, the last 4 digits. And
we have another question. It says, can you ask for a release before the 1 year, or are you not allowed to? We request that you don't ask before a year, but if you have a real emergency, we will work with you.
Yeah.
Yes, and that's where I was mentioning, if it's before the maturity, we would consider a refund with a 60-day notice. Because we have to reallocate funds when we are counting basically on the funds to be there for the duration and the maturity, we have to require that. But if it's getting closer and we are within the 30-day range of the maturity date, 30 days notice would be fine.
Yeah.
So let me kind of explain that much more simply.
Yes.
If you have an instance where you might have lost a job, there's a medical emergency, yeah, we're going to work with you to get that cash to you. If you're like, hey, just wanna, I changed my mind, or I found a different investment or something, you're committed in this investment for a year, we'll return it at the end of the year.
Okay.
I hope that's very clear.
Yeah, I'll answer the Karnakaran's question. And also, if it is a shorter term, like 6 months or 7 months instead of 1 year, most probably we may have to also reduce the percentage. So that we will discuss at that time, and case by case basis.
So I can account for an income from interest without necessarily collecting a tax document. If you feel better with it, you can. It's not like a K1 where we're legally obligated to send it to you and you're legally obligated to receive it and file it.
It also depends on the life of the project. Most longer term projects, they're not going to be revenue or sold within the same year. So there's more options that come into play there.
So thank you all very much. Unless you guys have we have one more question. Is there a targeted timeline to put in the investment? Right now, we want to raise the money immediately, and it, anytime soon is the best. But it is going to be like you can just invest 50,000, and later on, after 3 months, 5 months, if you have some more money, you can always come in and add. That will be a separate document again. So this one has been going on with the PG, the $3.85 million. What we are talking about, it has been, like we paid off $1 million. So a lot of money has gone out, a lot of money is coming in and things like that. So, which means it is continuously, it is going to be open. And right now we need $1.15 million currently. And if you have them within the next 2 weeks, that is preferable.
Time for one more question.
Perfect. Please confirm whether investment through LLC is good. It's always good.
Yes.
But it doesn't matter what you're investing in. If you can invest it through an LLC, do it.
Whether you'd like to do it as an LLC or as a partner, for example, you want to have your wife's name on there as well, or however you'd like to style the note and the deed of trust, we can do that.
Some of my self-directed IRA money is also with PG.
Yes.
So you can invest your self-directed IRA.
You have Roth IRA, self-directed IRAs, and same
All of
thing,
those
Quest
are
IRA. Even 401ks and such, you can have the transfer done through your institution. Once it's converted to a self-managed, you can invest that as you wish.
Yes.
Perfect. I want to share a little anecdote, and then we're going to end our webinar. I invest through my LLC. the money reaches my LLC, and then I spend it out of my business for legitimate business expenses, so I don't owe any taxes on it. That is the magic of investing through an entity. Here's something else that I do. Of course, check with your CPA on how you could do this in your situation. I buy my cars through my business. I invest with PG. He pays quarterly payments, and then my car payments get deducted from that. I have 2 luxury SUVs in my house that I functionally don't pay for. Provided that I keep my money with PG for 5 years, when the loan is done, I functionally have a free car and I get my principal back. There's a lot of opportunities for you guys
So,
to use
what-
this. Sorry?
what Ramu says is like when he gets a 4% loan for his car for $70,000, and when he gets 12% from PG, he gets 8% more. So that is the whatever is the extra money whatever he needs to pay, that comes from PG. So instead of paying it in cash and buying the car, he takes maximum loan, and whatever money he has for the car, he just invests with him.
You can actually get a 4% car loan and an 8% home loan and still be even.
Yeah.
You can
Anyway.
add them up and we're still making more here, right? I think you guys get the idea and the power of this investment if you can strategize it and structure it to your benefit and lifestyle. Couple of, just quick summaries. This investment, secured, guaranteed, yes. 12%, yes. It's also great for your lifestyle. It's also great for your security. So those are 2 things that I also would implore you to think about when investing. I always recommend that our investors have a little bit of money in PG's fund. If you're a young investor, a new investor, most of your money should be here simply because of the security aspect of it. Even if there's higher returns possible, we try to put money here because of the liquidity aspect of it, as well as a security and consistency aspect. So if you're curious about your risk tolerance, your risk profile, everybody thinks they're willing to take more risk than they really are, is the truth. Have a conversation with me or my dad. We'll help you understand what it really is for you and what asset classes should go where. So with that, any final thoughts, Dad, PG?
I will just add this. Guys, I don't know if everybody that's looking are here local in North Texas or from other states. Just Google Texas Triangle and you will see where this is going. Just don't let your money sit. Don't put it in a CD. Whatever you do, put it to work and let it pay for your life.
Yeah, and put it to work through a person who knows what he is doing. And that's why we have PG. And it is not just the real estate, but also there is a business aspects to it, the skill aspects to it, which he has. And we don't partner with everybody. We don't do the same thing with everybody. He's the only one whom we are doing business with in this particular model. Thank you all very much. We really appreciate all of you. And so we'll be in touch and looking forward to our call.
Everybody have a good night.
Bye-bye. Good night.
Bye-bye.